This is the Retirement Solution Podcast with financial advisor John Hicks, founder of J. Hagan Capital.
Glad to have you here with us on the Retirement Solution alongside financial advisor John Hicks. I'm Heather Branch here asking John for his ideas on the things that we can do now so that we are better prepared as we get into our retirement years, thinking about all the money we've worked so hard to earn and save. Now we got to make that money work hard for us, for ourselves, creating income streams, doing so many things for what's hopefully going to be a very happy 20, 30, 40 years of retirement. So if you have questions, retirementsolutionradio.com is where you can get started on a conversation with John and his team at J. Hagan Capital. We also have links posted in the show notes, or again, retirementsolutionradio.com. So we've been talking about how summertime, 'tis the season for going out to eat, spending money on trips and vacation. Everybody talks about Christmas time being the spending time of year. I always say I spend more money during the summertime, I feel. But that's probably because I don't have kiddos. So it's a little bit less of a financial strain on me around the holidays.
Well, you suggesting that kids are expensive, or they'll
Rumor
suck every
has
dollar
it, John.
out of your account?
What I had somebody said to me, they were like, if you want to know what it feels like having children, when you're driving down the highway at 70 miles an hour, roll down the window and just start flinging cash out the car. They said that's what it's like having children, and I was like, huh.
Yeah,
Noted.
That is a very an honest observation. That's kind of exactly what it feels like.
Mm-hmm.
Yeah.
So
yes,
all of my heart and uplifting strength that I can send to all the parents of the universe. Consider the energy being sent your way.
Yes.
In the meantime, thinking about where we're spending our money, particularly right now, particularly for the folks that you help with. They probably have kids that are out of the house, hopefully. Fingers crossed this day and age. You
Most
never know.
of them do, yeah. They still got Cletus down in the basement.
There's that.
He's got his hoodie on. See, I still have my hoodie. I'm a little surprised, that I still in my parents' basement. They didn't have a basement when I was growing up.
There you go.
We didn't have that kind of stuff. Yeah, but there's a handful of people out there that still have a lot of grandkids. Have
moved in with grandma and grandpa?
Yeah, I'm not. Well, I say a lot. It's just maybe in the last 6 months I've talked to 2 or 3 people. I'm like, why is that? It's like, well, they think their parents are too strict. I'm like, and grandma and grandpa. Yeah, you're a lot easier to deal with. It's like, oh, no,
Better
not
roommates.
at all. But we just don't nag as much. We just expect it done. And so the grass gets mowed, the weeds get pulled. And I'm like, man, maybe that's something to be said about that.
Listen,
maybe need to have mine go to my mother's house for, many long weekends and put them into, camp.
That's
if
it.
you will.
That's right.
Grandma camp.
Grandma
which
camp.
means weeding all the flower beds and whatever else that she bought them to do.
Folding laundry.
Dusting.
Dusting is a big one for grandmas. Is it not?
Ceiling fans especially. Yes.
Oh, yeah.
That's a big one. That's a big one. Mm-hmm. Finding all of the missing socks.
All right.
That's a
All right. So putting the grandkids to work is one idea, but hopefully maybe parents can not have to worry about spending so much on their kids. But thinking about the folks that you work with, and many of them are grandparents, and they are starting to think about, we talked about asset shifting before and where to put our money and how to prepare and what do we need to do. It's an interesting question that's happening right now with our market investments, because literally seeing record-breaking numbers happen in the last few weeks. The Dow hit 40,000 for the first time ever. And we've been talking, of course, about the tech sector and the high numbers the NASDAQ has reached in the last few years. So, the couple of questions for you on this, John, the idea of would you buy stocks in the market right now? That was the question posed by Fox Business to investment manager Rebecca Walser. And this is how she answered.
No, I think that stocks are overvalued right now. Obviously, there's always some winners. There's always some things that we can find opportunities with. But as a general rule, I think that we are overvalued right now. And with geopolitical risks and also really the central banks buying up gold because of the BRICS nations and what they're doing, I think this is a tell that there's political pain, economic pain, severe economic pain ahead.
Rebecca talked fast, and she had a lot to say in about 19 seconds, John.
Yeah.
She did say there are always winners. There are always opportunities, and that's what we seek. Because for somebody who is headed into retirement, we obviously want to pull back our risk.
Sure.
But the market is at all-time highs. So is it not a great time to be investing in stocks right now? But we don't want to lose out on growth either. I'm sure I'm representative of people that come to you and the things that they're saying to you. Am I not?
No, there's a lot of what Rebecca said that I kind of agree with, but I want to put it in context first, right?
Okay.
So when we're thinking about, acquiring money and saving money for a future need, what I would say is, is the market still a good place to invest? Absolutely. If you're not going to need a lot of this money for, let's say, 5 or 6 years, then I see nothing wrong with continually investing into equity markets or real estate markets or whatever it is you choose to invest in. But again, if we might need to use some of that money in the next 5 years, we probably want to think about a couple of other different things. How much of that money is protected? If the market does go down, and here, Rebecca had some interesting commentary. She basically just said the market's expensive. But I just pulled up on my screen one of the statistics that is put out by Robert Shiller. So I know I've talked about this guy on the show over the years. He's a Yale professor, but the guy won a Nobel Prize essentially for his research in stock prices and valuations. Now, does any of his research, does it represent a crystal ball? Can he say something where we absolutely know we should either buy now or sell now? Absolutely not. No. But the interesting thing, what his analysis just shows, is basically if we were investing in the market today, the stock market at today's prices is about 31% higher than the last 20-year average. So is he saying kind of what Rebecca Walser just recently said, which she said, hey, the market's kind of overvalued. Does his actual research also reflect that? Well, it does. Now, in and of itself, does that mean anything? No. Does it mean that the market's going to go up or down in the next month or year or whatever? No. What it does let us know, though, is today a very good time, or is there cheap stuff out there that we should take new money and put it in the market? Well, maybe not. Maybe not, at least at the moment. And here's the point to that. Is this something I look at every day? Actually, yes.
You do, because you're a financial advisor. We need you looking at it every day. The rest of us should not be.
Right. Yeah. So to me, what I'm looking at is it's not the fact that the market's, let's say, 31% more expensive than the historical average. What his actual numbers show is at today's prices. If you put $1 in the market today, he would expect it to only return about 2.8% over the next decade. So basically, things are so expensive. It's kind of like when you look at, and let's compare this to something we can understand. Okay. House valuations, right? A lot of us, if we own our own home or we looked at buying a home, they're kind of still expensive. They're not maybe the most expensive they've been, but it's still pretty pricey. And the question is today a really good time to buy those homes? Because in the long run, we'd expect them to go up in value. Well, it depends, because if we need a loan, those interest rates are really kind of high. 6.5%, 7% is what I've seen to get a home loan. Yeah. So if we're still kind of paying a kind of expensive price for that house, and we're also paying expensive debt service, is there maybe a different time to wait for a home purchase? Well, yeah, that's all that Schiller's research is suggesting to me about the stock market. Does it mean we jump all of our money out of the market right now? No, not at all. But if we need money in the next 3 to 5 years to spend for income, or we wanted to buy a bass boat, or we needed to send a kid to college or a grandkid, we wanted to help them out, or there's a wedding we need to pay for, whatever we think that we're going to spend on that, I really don't think that I would risk that in the equity market right now. Okay. Right? Because I think that if you look at it, so if the stock market, if Schiller's numbers are correct, and the stock market for the next decade only averages around 2.8, what can we still get from a bank CD right now? 4.5% to close to 5%. Some of them maybe a little bit higher. I know that the money market yield on a lot of our Charles Schwab accounts is over 5%. And that's typically considered unbelievably safe money that, is completely liquid. We can get to it whenever we want. So what would we rather have? A very low a risk investment that is going to pay 5 that we can get to when we need to, or we invest in the market and whatever it does over the next decade may only get like 3%. Guys, it's not tough to see that today's prices may be a little expensive. So if we're looking at retirement, the question is, where is our protection in our portfolio? Yeah. Where do we have those safety nets? Or do you have a stop loss in your portfolio? Do you have protective options that actually can make money if the market goes down too much? What about those large positions? I talk to people all the time. They get a ton of money in NVIDIA or Google or Microsoft or Amazon. They made a fortune on it. And the reason they don't sell it is because they don't want all those tax complications. They don't want to pay a bunch of taxes. Yeah. But at the same time, what protects them from the market going down 30 or 40%? Do they have any protection that can hopefully hold on to some of those gains that they've made, so they don't go back down and basically not have made any money on those equity positions? Those are things that we should always consider, right? Yeah. And the problem that I always come up to with a lot of people's portfolios is they own a bunch of mutual funds. Well, guess what? it is very hard to protect a portfolio of mutual funds. You can't buy options against them. You can't put stop losses against them. You can't do all the types of things that we would typically like to see investors do, especially as they get closer to retirement. We just want to make certain that, hey, if things go really wrong, how do you know you're protected? Because if we don't have protection, we probably can't generate an income that we need to stay retired. So when we're looking at prices, in the markets the way they're right now, do I think that they're detrimental and terrible or they're never going to go up? Of course not. But it may be a really good time to look at where are your protections in your portfolio? Can you make money even if the market goes down? And how much money have you made a lot of money on because it's been risky that may make some sense to maybe take off the table and lock in some 5% money market yields right now? Guys, 5% historically is a fairly attractive rate of return. Now, is 6 or 7 a little bit better? Yeah, and you can typically get that if you're willing to give up a little bit of liquidity. You can often still have complete safety of principal and still get 6 or 7. But the point is that Robert Shiller, the Nobel Prize winner, thinks that the market may not do better than that. So is it a time to reevaluate? For most of us, it may be just a good time to get at least a second opinion.
Helping you get that second opinion. That's what John and his team are ready to do with and for you as soon as right now. You can find us at retirementsolutionradio.com and get more information there. Also connect to set up an appointment for a second opinion on your retirement savings and investments. If you're 59 and older and have saved $500,000 or more, we'll offer that second opinion to you complimentary. We also have links posted in the show notes, so you can just click there or again, find us at retirementsolutionradio.com.
Thanks for listening to the Retirement Solution Podcast with John Hicks. Begin the conversation about your savings plan with John and the team at J. Hagan Capital by visiting retirementsolutionradio.com. Be sure to listen to John's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Inc. is not licensed in all 50 states. To find out if J. Hagan Capital Inc. is licensed in your state, please call 502-690-5635. J. Hagan Capital Inc. is not affiliated with nor endorsed by the Social Security Administration or any other government agency. It does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through J. Hagan Capital. National license number 1882794.